everyone. This is Jeb Hanwerger today with a very exciting project that I've mentioned to some of my premium subscribers. I've provided a little bit of an introduction to Aquila Resources, which can be traded as AQA on the TSX. And it also can be traded in the US as AQARF. And I wrote about it because it's a very advanced project in Michigan, their flagship project, and they also have some really great high-grade gold projects in Wisconsin. And their gold project, their flagship project, has a very high-grade project, and it has a lot of base metals credits, which could be very polymetallic, could be very profitable in this next period that I expect that we're heading into. So I'd like to introduce today Barry Hildred, who's the CEO of Aquila, and David Carew, who's the Vice President of Corporate Development, to give us an introduction and to go through the presentation with us and to give us some highlights into the current, what you guys are currently working on, how you guys have gotten to this point, and what some of your expectations going into 2021. So Barry and David, thank you so much for being here with us today on Gold Stock Trades.
Thanks, Jeb. Thanks for having us.
So Barry, let's start off with you. Talk to us about the history of this project and how you got to this point. Take us through the beginning of why to invest and the history of this project.
Yeah, so first of all, maybe I'll just talk about the area that we're in. So we're focused on what's called the Penokean VMS Belt, which we think is an exciting new district opportunity in the US.
Mm-hmm.
So this map really illustrates where we are. This shaded area in the middle is the Penokean Belt. Back 40, as you mentioned, is our flagship project. It's in the state of Michigan. It's up in the northeast corner of the belt. And then Bend and Reef are our two earlier stage exploration projects, both in Wisconsin. So this is a belt that had a lot of drilling, a lot of exploration work that was done back in the 60s and the 70s. There's 24 known mineral occurrences on the belt. It's very similar in shape and size and age of rock to Flin Flon, for example, up in Canada, where they've been mining for better than 100 years. And the primary difference here is the Penokean Belt has only had one operating mine. That's called the Flambeau mine, which was closed back in the mid-90s. And we think both of these states, Michigan and Wisconsin, are shaping up for a bit of a mining resurgence. So Michigan passed new mining law about 15 years ago. And under that new mining law, they permitted 3 projects. They permitted the Eagle mine first, which is now owned by Lundin, went into commercial production in 2014. It's about 90 miles north of Back 40, and it's represented on the map here. Wisconsin changed their mining law back at the end of 2017. They passed what they called the Mining for America Act to bring mining investment back to northern Wisconsin. So we're excited about the belt. We're excited about the opportunity. We've advanced Back 40. We're well through the permitting process. We're getting close to the end there, starting to focus on pre-construction activity, getting our site compliant with all of our existing permits. And then as we're finalizing the development of Back 40, we want to get to work doing further exploration at Bend and Reef, which we think showed just tremendous potential.
So let's talk about these new laws, because it's so important for this project, this Back 40 project, because this isn't so many junior miners that they're starting out, they're just exploring, they're just starting to come out with economic studies. You've done all of that. So when people are investing, you have here already a resource, you have a PEA that you recently did.
Yeah.
Can you talk to us about all that you have developed, this company has developed to make it this advanced?
Yeah, so we've spent, not just ourselves, but also our partners. So this was a joint venture at one point with Hud Bay Mining, and so between ourselves, Hud Bay, upwards of close to
And
100
just so
million.
before you go on, Hud Bay, for investors that are new to mining,
Yeah.
so we know who Hud Bay is. It's a major copper company. Is that correct? It's a producer, copper producer.
Yeah, it has projects in South America, obviously projects in Canada. Also has projects in the U.S. So it's all over the Americas, and it's been around a long time. I think it's one of the oldest listed companies, actually on the TSX. I heard as a stat at one time, and they've been a good partner. They do own about 11% of Aquila currently, and have been a good partner. We bought the project back from Hud Bay back in January of 2014, and so that's when my tenure started with the company. But between ourselves and Hud Bay, upwards of 100 million's been spent on baseline environmental studies. Obviously, all of the drilling and exploration work that's been done, all of the permitting work that's been done to date, land acquisition, all of the engineering studies that have been done to date. So it's a lot of work that's kind of culminated into the place that we are today. And it is a long road. It's permitting in the U.S. is not easy. I mean, there's very, very strict and tough environmental standards. The one interesting thing about Michigan that I think is sometimes overlooked, people don't really recognize, is that Michigan has delegated authority to issue all of their own permits. So it really is a state permitting process. For example, for a wetland permit, normally in most states you have to seek what's called a 404 permit with the Army Corps. Michigan actually has their own delegated authority to issue their own 404 permit. So you're dealing with one regulatory body, which does improve, I think, the efficiencies when you're trying to achieve permitting status for these projects.
And you mentioned recently that you said Michigan and Wisconsin, there has been a push for mining and manufacturing with the new laws, new mining law in Michigan and the Mining America Act in Wisconsin. Could you highlight a little bit more that how that could help Aquila moving forward?
Yeah, so for Michigan, for Back 40, we've been operating under the Part 632 mining law in Michigan since we started. So that was law that was passed 15 years ago before we even started the permitting process, and that's the law that Eagle Mine, for example, was permitted under. So Michigan has some history. They have some experience in permitting mines. As I say, they have permitted 3 projects since they passed that new mining law. Wisconsin is new. There hasn't been any mining projects recently permitted in Wisconsin. The law was passed at the end of 2017. There has been, essentially a 20 to 30 year void of mining exploration in Wisconsin. So, we certainly need to ramp up that activity. We need to get these projects to a stage where they can actually start to pursue the permitting process. But the nice thing is in Wisconsin is they're trying to streamline their permitting processes. They did have, for example, at one point, they had a mining moratorium in place, which they repealed as part of that Mining for America Act at the end of 2017. So, we think it's set up appropriately going forward. Not to say it's going to be easy to permit a project in Wisconsin, but it's one of the reasons why we think having this portfolio of assets on this belt and having one, hub projects like Back 40 that's permitted, in development, ultimately in operations, is going to be important in launching and developing other projects going forward. Reef and Bend are very close to Back 40. Reef's only about 80 miles away. Bend is about 130 miles away.
Hmm. So, Dave, why don't you take us through a little bit about uh, the economics and some of the values, especially when you include some of the base metals in. I know that you've done some work updating, with the PEA that was completed recently, but zinc's made a big move, and this project has a lot of zinc credit here. Um, and so, if you could maybe update us on the PEA and maybe what would it look like now with some of the updated prices so that investors can plug that in?
Yeah, of course. We put out a PEA this past summer. In August, we press released it. We put it on CDAR back in September. You can see the base case metrics here. The prices are there. So we use 1485 gold as a base case and $1.08 zinc. You see that generated after tax 176 million and a close to IRR 26%. At the time, gold was trading closer to $2,000 an ounce. Zinc was $1.04. And you can see in the inset there, the top right, what that generated at the time, close to $316 million NPV after tax, pushing 40% IRR. Today, obviously, gold has pulled back. We're at around 1870 today, but zinc is about $1.21. So one of the things we like about these polymetallics is it provides a bit of a natural hedge to the metal exposure. So we're very pleased with how the numbers have held up. Just by way of background, we put out the PEA, as I said, in the summer. That was a step back. So back in middle of the summer 2018, we put out an open pit feasibility study. That was just on the open pit, obviously. We wanted to show investors and the community a longer mine life. So we put out this PEA, incorporated the underground resource, went from 7-year mine life to 12. And we were also able to bring the CapEx down, as you can see, to about 250 million US. So we think this is a doable project for us. And because of the metal exposure, is going to be robust in just about any environment. Just taking a step forward here, you can get a better sense for the base case split. So revenue by metal in that pie chart, bottom right at our base case, we're about 45% gold, 45% gold by revenue, 38% zinc. But you can see in that sensitivity table, $1,800 an ounce gold is really the magic number for us. So at today's prices, we'd still be 50% gold by revenue. We think that's an important place to be. More of a precious metal story, especially in this environment, I think is positive, both from project metrics, but also for investor appetite. A lot of people are looking for precious metals exposure, given the environment we find ourselves in today. So we think this is a project that is kind of a sleeper gold story. Folks who would have been following this story, say back when we put out the feasibility study in 2018, probably would have viewed it more as a base metal story, more of a zinc story even. We think that's changed. That's one of the reasons we are working with you, Jeb, is to get the message out now that if you're looking for gold exposure in a good jurisdiction, in a tier 1 jurisdiction, we think Back 40 is a great project to do so. It gives you the leverage to gold, as you can see here, at $2,400 an ounce, which, despite today's price action is not that far overhead. And we think we could easily see it in say 2021, you're pushing 60% gold by revenue. And, one of the things about being a polymetallic story is you're never going to be the flavor of the day. But by the same token, you're probably going to be in a position where you can operate the project profitably in just about any environment. So we're really excited about the perfect storm that may be setting up here on the metal side, where gold is probably going to do well, silver is probably going to do well against a backdrop of US dollar weakness post this COVID era. But you may have a situation, given the stimulus measures that likely are coming down the pipe, that you have a lot of demand for base metals, not only copper, but zinc as well. So we think Back 40 is a project that stands up extremely well in the current environment and any foreseeable environment we can see going forward here.
And Dave, if you could put up the slide which shows the high grade gold, the Aquila project. You had one slide I remember where you have the gold, the grade gold versus development projects. That really puts, yeah, this slide really shows where that you're placed here. If you could highlight that slide, kind of that this is an important slide for investors to know about when you're seeing some of these companies with, you know, major M&I resources and looking at the grade.
Yeah, exactly. We think, you know, there's the old saying in mining, the grade is king. And, you know, one of the reasons is if you've got a high enough grade, it tends to support, you know, mining in an environment where maybe some metal prices pull back. At least you've got the grade to fall back on. You know, some of these projects here that are lower grade may work in today's metal environment, but the grade may be so close to the cutoff that those projects become unprofitable at lower metal prices. So they may provide more leverage because they're larger deposits typically, but we think we're kind of in the sweet spot where you've got a reasonably large deposit, about 18 million tons, including the underground, but it's very high grade. You know, 4.3 grams per ton on a gold equivalent basis. You know, you see stacks up well against our peers. And as Barry mentioned, you know, some of these companies, you know, despite being very attractive, you know, assets in some cases, are at much earlier stage. So perhaps they only have a PEA or a pre-feasibility on the project and haven't started the permitting process. We've got an open pit feasibility study on the project. We've optimized it and put out a PEA incorporating the underground. And we like to think we're about 80% plus of the way through the permitting process here. So we think if you're looking for kind of risk adjusted returns with exposure to gold versus some of these peers, we think we're, you know, a fit for many investors. I should also point out that, you know, Aquila's in Michigan and Wisconsin. So we're in the US. Our flagship is in Michigan, and our two earlier stage assets, Bend and Reef, are in Wisconsin. You know, some of these projects are in jurisdictions that are certainly not as stable as us. So I think it's something we like to point out to investors who are looking for exposure in solid jurisdictions that have high grade projects.
And Barry, you mentioned that in Michigan and Wisconsin that there's bipartisan support for mining. Am I correct about that?
Yeah, there is. So you know, there's a lot of strong support in Michigan, you know, for mining. You know, certainly economic development is important. You know, putting people back to work is important. If you look at, you know, sort of where we're situated in Michigan up in the Upper Peninsula, it certainly, you know, at least in this last election, did vote strongly Republican. But having said that, there is also Democratic supporters in Michigan for the project. So, you know, we like that. We like bipartisan support. We think it's important that, again, coming out of COVID, looking at an economic recovery, you know, is going to be of primary importance. And, you know, I think that sort of crosses political divides.
So Barry, you said 80% permitting is pretty much done on Back 40. What should investors be looking forward to in 2021? What's the next step to get the rest of the 20% done? I know that recently you hired or you put on the board someone from Osisko Gold Royalties, who's a mining engineer, a mine builder.
Yeah.
So that kind of sent a message that maybe you're getting closer to construction decision or getting to that point possibly next year or so. If you could highlight what's that 20% that's left for us.
Yeah, I mean, first of all, I'll say that we'll continue to look to evolve and continue to look to augment the board and the management team, quite frankly, as we go forward. We think, where we're situated today, given the part of the development cycle we're in right now, that we're in good shape, and we have a good team to get us there. But we'll continue to look to upgrade and enhance as we go forward. In terms of the permitting status, there are 5 permits that are required to build and operate. We submitted for 4 of those permits. What we like to say are the primary permits to build and operate in Michigan back at the end of 2015, and that was a mine permit, an air permit, a national pollutant discharge permit, which regulates surface water discharge, and a wetlands permit. So all of those permits have been issued by the state. The last permit to be issued was a wetlands permit in June of 2018. We did amend our Part 632 mine permit last year to sync up with the feasibility study we did in 2018. And that permit amendment was granted by the state in December of last year. What came out of that process was the need for a dam safety permit. So we are in process on a permit application for a dam safety. That permit is expected to be submitted in Q4 of this year, hopefully in the next few weeks. And then we expect that to be issued in 2021. And that'll be the final permit that's required to build and operate.
And many of my subscribers know that one of the great places to buy a miner is when they're right before they make those construction decision. That's one of the big re-rating periods in the life cycle of a junior miner. So Dave, could you highlight where you are on that life cycle of a junior miner, why this is such an important point for Aquila, and the importance of having the shareholders that you have, Orion Mine Finance, Hudbay, Osisko Gold Royalties, because those are the guys that get behind projects that they believe that can be in production. They are mine builders. And if you could highlight the importance of those shareholders right now.
Absolutely. Yeah, we're showing here kind of the life cycle of a miner. It's also called the Lassonde curve after Pierre Lassonde. We're squarely in that development zone. Typically what you see in the industry, and is actually what we've been seeing over the last couple of years, is there's a great deal of excitement about kind of those early stage discovery plays. And then there's excitement about the production stories, the cash flowing mid-tiers and seniors who benefit from prevailing market prices. But there's a phase in the middle where there's a perception where the risk of permitting delays and cost overruns outweighs the speculative value of the project. And I think the good thing about Aquila is we were able to identify some long-term and supportive parties like Osisko Gold Royalties, like Orion, who recognize that companies require a significant amount of capital in that development phase to get through permitting and baseline studies, pre-feasibility studies, and into feasibility studies that don't necessarily generate a lot of news flow that attracts your perhaps your retail investor, but need to get done to add value and to advance these projects. So we were able to bring in Orion back in 2015. We were able to bring in Osisko in 2017. And between those deals, we're able to raise tens and tens of millions of dollars in what was anti-dilutive or non-dilutive financings for the most part. So we sold a small silver stream to Orion back in 2015. We sold a gold stream to Osisko in 2017. And those deals were able to fund us to where we are today, where we've got the majority of the permitting behind us. We've got the majority of the engineering and at least the study work behind us. And now we think we're setting up well to benefit from re-rating as we kind of knock down the final hurdles here. So, you know, we think if you look at our stock chart, we didn't benefit from the kind of heady days of this past summer where a lot of the gold and silver focused names were going on a run. Part of that is because those names for a large part were more of the exploration early stage companies that aren't even talking about permitting yet. We're in the development phase where I think people are more focused on actual milestones that are coming up that will de-risk the project and make us more attractive either to, you know, a mid-tier who's looking to park themselves in a good jurisdiction for the next 10, 20, 30 years, or open up the optionality for us to actually finance the project and build it ourselves. So we think for, you know, someone like a subscriber of yours, Jeb, who this is a new name for, this is probably an optimal time to be looking at a project like this, because we're well advanced through this development phase, and we expect some milestones in the relatively near term that will de-risk the project to the point where we can start benefiting from this Lassonde curve and move up towards that production re-rating that you've seen a couple companies, you know, for example, like a Minera Alamos, you know, as you've seen, as they move forward through their pre-construction phase, investors are taking notice, and those who were able to get on board before they started to de-risk the project have benefited very well.
Yeah, and I would just add one other thing, and that is, you know, the other benefit at Aquila that we have, or that we believe we have, is as we're pushing back 40 through this development phase, we also have the exploration upside associated with the projects in Wisconsin. So, and we think those are good next generation assets. We think they're, you know, important to our regional strategy, and those are projects that we want to drill in the near term as well, so that, you know, you can get a little bit of both.
Can you show the Wisconsin slide to show some of the grades and the exploration upside there? And maybe even, I think I saw a slide that shows back 40 has some really interesting upside as well.
Yeah, so I mean, maybe we'll just start with Wisconsin. So again, we're on this Penokean Volcanic Belt, and maybe just start at Bend, Dave. So Bend is a copper gold project. It's a VMS, so it's very similar to back 40, and it is an underground deposit. And you can see that now most of the historical drilling that was done at Bend was non-43-101 compliant. It was before that regulation was passed. You can see that they did delineate previously a resource of better than 4 million tons, 2.4% copper in the copper zone, and almost 5 grams per ton of gold in the gold zone. Wow. So we did acquire new land here last year, and you know, the objective here is to drill on that new parcel moving forward. So we think there's a lot of upside here, you know, for future drill programs, and we hope to do that in 2021. If you look at Reef, Reef is a open pittable near surface quartz vein style deposit. You know, Aquila did do a small drill program here back in 2012 before my time, 42 drill holes, 4,400 meters. But you can see the resource extends from surface about 450 feet. So it's very shallow. It's open in all directions. And this is a project that had historically been drilled by Inco and Noranda. And they delineated, again, a non-43-101 compliant resource, but close to 500,000 tons, grading better than 10 grams per ton of gold. And just to illustrate some of that, you know, gold value, we put in here a picture of a visible gold in a boulder that was actually sampled at surface at Reef, and it returned an assay of 379 grams per ton of gold. So, and there was a lot of these types of boulders on surface. So these are projects that we're excited about. We think are going to add future value to Aquila. Again, all part of building this portfolio of quality assets on the Penokean Belt. And to your point, Jeb, there is also, back 40 is open at depth. There's opportunities at depth at back 40. We have some drill holes as low as 700 meters where we're getting intercepts. And Dave's pulling up the slide here. You can see these two limbs, number 1 and number 2, coming out the bottom of our pit. They're moving southwest in direction. The lower limb, number 2, you can look at some of those drill intercepts, like LK484 was a drill hole that returned 31 meters at 6 grams per ton gold, 17 meters at almost 14 grams. So again, as we continue to drill at depth, it continues to deliver good results. None of those drill holes, incidentally, are included in our resource estimate. It needs tighter spacing, and we'll have to continue to drill at depth to add tonnage and resource. But we think, that this will be a deposit that continues to, sort of keep on giving as we go forward.
Dave, could you highlight about your treasury, about what your current, financial situation is?
Yeah. Yeah, we've got at the end of June this year, we had $4 million US in the bank. Sitting here in November, we'll be putting out our Q3 results just a bit later in the week, so you'll see what those numbers look at. We do have as well. Maybe I'll take this as an opportunity to describe the gold stream we have with Osisko.
Yes.
So we do have some future payments owed to us with this deal. So just by way of background, as I mentioned at the outset, we did do a small silver stream with Orion back in 2015. That stream got sold to Osisko in 2017 as part of a large portfolio of offtakes, royalties, and streams. Osisko actually diligenced back 40 specifically in that process. It was considered, the silver stream was considered a top 10 asset in that portfolio. So Osisko actually sent their technical team to site. They decided they quite liked back 40 and the potential, specifically the gold potential. So we actually started negotiating with them after that deal closed with Osisko for a gold stream. So this deal closed in November 2017, $50 million stream. We've received those first 3 payments of $17.5 million. We still have $32.5 million US dollars owed to us from Osisko under the stream. $7.5 million is going to come to 2 tranches, which we expect to be received over the next, say, 12 to 18 months. They're related to certain corporate and project milestones. And then the final 25 will come on drawdown of a project debt facility for back 40. In exchange for this, Osisko will receive 18.5% of the refined gold from back 40 until we deliver to them 105,000 ounces, which you can roughly think of as the open pit deliverables. And then after that, so say after you're into the underground, the stream falls to 9.25%, and we'll receive 30% of spot at the time of delivery, up to $600 an ounce. One important feature of this deal, which isn't here, is there is a change of control provision whereby if back 40 or if Aquila were to be bought by, say, a mid-tier between now and actually constructing the project, that buyer could elect not to take that final $25 million payment, and the stream would be cut. So that 18.5 would go to 11, and the 9.25 would go to 5.5. We didn't want to have this stream stand in the way of, say, a gold producer who obviously would want as much gold as possible from this deal, while still giving us the flexibility to have this funding and be able to advance back 40. So with the $7.5 million that we expect to come in the next 12 to 18 months, plus the cash we have right now, That would be enough to certainly start our updated feasibility study and incorporating the underground. But we would like to be raising some equity here, obviously, ideally at higher prices, given that we think we're already very cheap relative to our peers. But we're not in a position, fortunately, with this cash on hand, that we need to be raising money, in the coming weeks by any means. We'll pick our timing right, and hopefully get good support. To the question of valuation, I'll throw up the slide which we compare ourselves to our peers here. So this is a slide that shows the relative valuation. So if you boil down Aquila on an enterprise value to measured and indicated resource ounce on a gold equivalent basis, you see we're trading there at about $15 in the ground. That's versus a peer median closer to $60. And these are the same peers I showed earlier on the grade basis. So some of these folks, are not as far advanced as Back 40. They're not in the tier 1 jurisdiction. So we think there's a lot of upside here for investors. Clearly, we'd like to be, raising equity capital at higher prices. But for, a subscriber of yours, Jeb, who's not yet in the story, we think this is an extremely attractive entry point, and will likely benefit from the de-risking steps down the road from permitting activities, putting out the updated feasibility study, et cetera. You can also see on a price to net asset value, price to NAV basis, we're trading at about 0.3 times. That's on, kind of using street prices and the valuation that the analyst at Cormark, Stefan Ianu, put on the project. If you just look at technical report NAV, where I pointed out on the earlier slide highlighting the PEA metrics. So remember, US $316 million after-tax NPV at close to $2,000 gold, $1.04 zinc. I told you that at spot today, with zinc at $1.21 and gold below $1,900 an ounce, we're actually higher than this. So think about this, Jeb. We're trading at over 400, pushing $500 million after-tax NPV Canadian, versus our market cap today of 45 Canadian. So it's really, on a technical report basis, we're only trading at about 0.1 times NAV. For a project in the US with exposure to gold and base metals.
Oh, an amazing opportunity. 0.1 times NAV, 100 million has been spent already. Market cap's below 50 million. 80% of the permitting's almost done. Michigan and Wisconsin becoming much more favorable to mining on a bipartisan level. How do investors get in contact if they have more questions? If they're either people want to help finance or become shareholders, how can they do more due diligence and to contact you directly?
They're welcome to reach out to me or Barry directly. Our emails and our phone numbers are here. Our website is aquilaresources.com. You can find this presentation there, as well as the PEA technical report and other supporting information. But for those that are interested, I would suggest pick up the phone, and we're always happy to talk to existing and prospective investors.
Well, Barry Hildred, CEO of Aquila Resources, and Dave Carew, Director of Corporate Development and IR, thank you so much for being here with us today and for highlighting Aquila Resources and the Back 40 project and the projects in Wisconsin. It can be traded again as AQA on the TSX, and it also can be traded for US investors as AQARF. Thanks so much for being here with us today.
Thanks, Jeb.
Thanks, Jeb. Appreciate it.